Hey guys, I just wanted to make a quick recap video on the gold trade that we took this morning. So basically, I'm going to break this trade down, right, with all this mess, and then I'm going to take all these lines away and then reset it up so you guys can see the thought process behind it. So off of the 15-minute, basically, when I was looking at the chart, our swing high and swing low was already created, right? So I was looking at the chart maybe about 7 a.m. today. So I could see that initially price kept pushed up, then we formed a lower high, and then price pushed down, created that swing low because we had that higher low just beside that. So I automatically marked out that as my buy side liquidity, and then this point as my sell side liquidity. And all I was doing is waiting for price to either give us a continuation signal or a reversal down signal. Based off of this movement right now, this leg, yesterday's leg, I could see that we are breaking these highs and we could be starting a bullish trend, right? So my bias right from the beginning is already a bullish bias. So I was technically looking for a long position just in case price broke below our liquidity and stayed below, then that would give me an entry option to go short back down to the lows here. Basically, where I took my entry was off of the 5 minute, but this is where I was doing my markup. So off of the 5 minute, this is what I was looking for. Like this is how I took my entry. So off of the 5 minute, I basically waited for the next swing to be created, right? So we can see here that this was our low, which is our sell side liquidity, and then this right here is our higher low. And you can see how price came down and sort of formed this swing off of that trend line from this low here, right? So from this low here, you can see how price came and bounced that trend line and created that swing. So as it was creating that swing, and that swing was confirmed, I took my long entry from the breakout of this wedge. So I'll show you how I drew this wedge after. I'm just explaining my thought process, how I took this entry. So after I had my setup, then I needed some confirmation, some things to happen before I took my entry. So this is what I needed to happen before I took my entry. So I waited for price to come back down to this little trend line here, knowing that if price decided to continue falling, I would have a re-entry option down here for the buy. This right here would be the sell side liquidity. So oftentimes when we see that liquidity get taken, price does push in the opposite direction, right? So I know if this long position didn't work out, this is sort of a backup entry position for a potential long entry, right? Anything below this level, so if price kind of came down and stayed below this level, would be a short position for myself, right? So in this case, we were bullish, trending bullish, obviously, right off the start. We had that bullish leg up off that 15 minute, and we're just waiting for a pullback and another entry option to catch that second leg or another entry setup. So that's how I entered this trade, right off of the swing off the trend line. So this is pretty much where my entry was. And then we took that trade for a 7.2 risk to reward for 13 points up. So we had about a 1 point stop loss on this with 13-point move up target. Personally, I had to close the trade somewhere around here because we were getting close to the max profit for the day. But the overall trade did hit take profit and did go a lot higher after that. So I'm going to remove these lines and we're going to go back to the 15-minute and then I'll redraw the lines so I can show you in a little bit more detail on how I did it. first thing when I came onto the charts, this was not here. So when I was on the charts, I was probably looking at this candle here on the 15-minute time frame. So first thing I could see right before, right, the movement before this candle, right, I can see that price pushed up, created a lower high, right? So first thing, I marked that level because that is an important level for me in case I want to go long. If price is to continue long, it needs to get through that level, right? It needs to get through it and it needs to hold above that level for me to continue long, right? And I also saw this level down here, right? This little low of this candle. So that gives me my high, that gives me my swing low. Swing high, swing low. On the opposite side of this is buy side liquidity, and on the bottom side of this is sell side liquidity. So I can label these template, sell side liquidity, bottom. What's easier to see, and then this one would be buy side liquidity, right? So these are the first 2 points that I was able to pick out, right? And these are the net main points that I needed to pick out in order to set up my trade, right? So when I saw these points created, I also saw that this liquidity was taken, right? This liquidity was taken before. So what that means is buyers pushed it up here. The orders got filled. Anyone that was buying the orders got filled. And then the sellers pushed this all the way back down, right? So this is what you call a manipulation tactic where orders will be filled and then price reverses, right? This is just to stop people out, right? To create liquidity in the market. So when we can see that happen, we can enter the opposite side of the trade, right? So if we can see price come up, take liquidity and start to reject, we could potentially go short for a quick scalp, right? But in this case, we didn't do anything because the trend is pushing bullish, right? The momentum is coming bullish. We didn't want to short off of these liquidity points, right? I was actually personally looking long from these points. But if you were to short, this is a way you can short and get that trade into profit is by identifying your swing liquidity points, your swing points, and your liquidity levels, and then waiting for price to come and take those levels or to push through those levels for a continuation. What we saw here was our buy side liquidity, sell side liquidity, and once I can identify my buy side and my sell side, I like to draw my trend line from those 2 points, right? So I draw my trend line down from those 2 points, and same thing with my sell side liquidity. So once I see that zone created, I like to draw my trend line from that point up. So now you can kind of see a wedge pattern forming, right? So that is the second step. So first step was identifying the buy side, sell side liquidity. Second step was to draw my smaller trend line, my micro trend line off of the 15-minute time frame. So basically I'm trapping price and I'm waiting for momentum to break it out. Next thing was I drew out my short and long position. So I drew out my long position. I believe it's somewhere in here. Let me just check the chat real quick. So entry was 2025.9. 2025.9 was the entry. 2025.9. Okay, so there was my entry. This is off of the 15-minute time frame. So I drew everything off of the 15-minute time frame, and then I went and I refined it on the 5 minute time frame. Right. So this was the the setup. It went to here because I have buy side liquidity here. So I'm just gonna move. I can just take it to the 1 hour so I can show you maybe the 4 hour. Easier. So the reason I had my targets up at this line here is because we had higher time frame liquidity points up here. So we had buy side liquidity off of the 4H over here and over here, and we do have more points up top. Right. So right now I just wanted to target these recent points here. Well, not so recent, but points that were made previously, price action. So I just targeted those points right there. And you can see that price did go to those points. So now back off of the 15 minute, you can see where I targeted. So my target was actually on a 4 hour level, right? But I took my entry off of the 5 minute, but my setup was off of the 15 minute. All right, so I targeted a 4 hour level. I did my setup on the 15 and took my entry on the 5 minute. Let's down to the 5 minute. And then I can show you a little bit more. So right here, right here, this arrow is our swing point. Right, so I'm gonna put these in maybe red. So this one there, this one here is our swing points, right? So liquidity. This right here, this one here, and this one here are sweep, right? So this was the liquidity sweep, and it did come back again. Sweep anyone that was left over. I'm gonna change those ones to blue. Just so you can see it. Move this over. So now we have our liquidity points, our swing, then we have the liquidity poles, right? So these are the sweep levels, right? Once price started to come back down, where was I looking for a entry? I was looking for an entry on the next higher low, right? On the next higher low, which would be the next kind of swing point, right? So I knew that there was liquidity here. So I went ahead and I drew a box, a little zone here, my blue zone. This just tells me that, hey, there is sell side liquidity here. If price decides to come down, we could possibly see a spike back up, right? If price is to come down below this and is to stay below this, then we could be looking for short side opportunities. And if price is to break out, right, out of this wedge and take out our liquidity, stay above our liquidity, we are going to continue long. Right, so those were my trade options there. Also, I had a potential short coming down from that liquidity point. But as I said previously, since we are pushing bullish, the momentum is going bullish, the market's going bullish, we want to be going with that market. Right. So that's the reason why we didn't take those liquidity shorts. So the way that I took my entry is I drew my zone, I saw price take off, right? Come back to the zone. So price created the zone, price takes off, comes back to that zone. Just so happens that it comes back to my trend line and it also comes back and it creates that swing. It creates this swing above my zone. So above my blue zone, also above this liquidity level, right? And when it's doing that, while it's doing that, it just created another sell side liquidity level. right? So while it was doing that, it just created another sell side liquidity. Sell side liquidity level, which we can now use just like we were going to use the bottom one, right? So now we have a nice zone to say that, hey, if price decides to push up and, for whatever reason decides to come back down and it gets under these liquidity levels, then we should be looking for a potential hold, right? If it comes under these liquidity levels and then forms that swing again up, then we can potentially go long back up, because that would just mean that price came down. It took out all of these sell orders here in order for it to start moving back up. That's kind of what this setup and what all these levels are telling me. So they're just a few lines, a couple zones, but they are telling me a lot, right? Based off of entry, or for my entry, they're giving me a lot of information. So once I saw this swing created, I took my entry, right? I took my entry off of the break of the highs of this candle, right? So this kind of zone right here, I'll mark it off with a blue box. Once price broke above that, I took my entry and it never came back. So once it took, it broke my wedge. So once I took that entry, it broke the wedge. So that was a confirmation for me to stay in it. Then the next candle broke above the buy side liquidity. So that was a confirmation for me to stay in it. And then price held above that zone. So that was another confirmation for me to continue to hold that trade. And price just continued to create more levels. So before you saw the chart and there was more and more levels, it's just because I was marking out these levels that were needed for price to be over or be under for something to happen, right? For price to come down or go over or keep going up, we needed these levels to continue breaking to the bullish side. If they stop breaking to the bullish side and start to come back down and breaking the sell side liquidity levels, the SSLQ levels, then we would know that, okay, we could potentially start to short this market instead of looking for long positions. And yeah, that's basically how I took my entry off of that. So I know it's still a lot of information, I guess, but this is really broken down on how I took that entry off of this formation here. Even though we missed that initial move, we're still able to get an even bigger move that way. So that was a really good trade. We took that trade at, I think we took it at one contract, then we scaled in for 5 contracts. So that was one trade on the long side for 4,400 on the day with that. So we hit max profit on Top Step. On the Top Step 150K challenge. So we're going to go for the profit target tomorrow. If gold is moving, if gold is not moving, then we'll probably won't hit profit target tomorrow. We'll see how NASDAQ NQ is doing tomorrow as well. So if NQ or gold are moving, then we should be able to hit profit target. If it's a sideways market, then maybe not. But anyways, I hope this video helps you guys. If you have any questions, definitely reach out and let me know and I can help you out. Have a good one, and I'll see you on the next one.